Good evening. I have an update from a website called Trade Brains. They've had an article suggesting that there are four stocks which are trading at a 52 week low. So basically, it refers to Hindustan Unilever, Hero Motocorp, Colgate-Palmolive, and Happiest Minds Ltd. It suggests that buying fundamental strong stocks near the 52-week low can be a great opportunity. Companies with good, strong financials, financial management, and consistency, which are currently undervalued due to market fluctuations, have significant upside potential. The common in the market can be used in search. The article contains name of some stable stocks that are fundamentally strong at the 52-week low. So this I would suggest you consult a financial stockbroker. These are the inputs that I have picked up from the trade article of Trade Brains. So something that you can keep a track of, but consult an advisor, see how their typical fundamental performance has been over the last few years. So I'm trying to take you through some information. There are some financials that I've managed to gather for all the four companies. There's a little bit of explanation of each ratio and the financial term below, so you can go through the details later. We'll go through some pictures and some information that will help you review these four stocks. So let us look at this. This is the current price of Hindustan Unilever Limited. Hindustan Unilever is an FMCG business, comprising primarily of home care, beauty and personal care, food and refreshment segments. The company is manufacturing facilities across the country and sells primarily in India. The company has a portfolio of 50 brands spanning 16 FMCG categories, 19 brands with a turnover of more than 1,000 crores. Products are split into home care. You have big brands such as Wheels, Surf Excel, Rin, Comfort, Vim, Domex. Then you have segment revenue grew by 32% in 2 years. So beauty and personal care like Sunsilk, Vaseline, Glow and Lovely, Lakme, Lifebuoy, Pond's, Dove, Close Up, and more. Segment has grown by 15% in the last 2 years. Then there's one more brand, food and refreshments. So that again, we you can go more through like soups, products, different products based on tomato-based products, fruit-based soups, and etc. So moving on, the market cap is 5 lakh 27,000 crores. Current price 2246, high of 3,000, low of 2136, PE 51, book value 216, dividend yield 1.87, ROCE 27, ROE 20, face value 1 rupee. You can see the financial here, 1.61 revenue up year on year, so that's a good sign. Net income again up 19%. Then diluted NPS again up by 19%, and net profit margin up 17%. So EPS missed by 0.79. Uh, EPS missed in the previous quarter by 3%. Overall book value 227. This is from another site. Maybe slightly older numbers. EPS 44. Sales growth of 2.24. Promoter holding 62. Price to book of 9.8. So brands Axe, Boost, Sif, Comfort, Cornetto, Dove, Hellmann's, Horlicks, Light Horlicks, Horlicks Protein Plus, Junior Horlicks, Knorr, Lifebuoy, Lipton, Love Beauty and Planet Lux, Magnum, Mother's Horlicks, Pepsodent, Pond's, Rexona, Sunsilk, Tresemme, Vaseline, Avians, Wheel, Brew, Citra, Clear, Close-Up, Domex, Glow and Lovely, Lakme, Pierce, Pureit, Rin, Surf Excel. There are many other brands. You can just go through if you wish. Uh, the list keeps on and on and on. So quite popular company in the Indian market. Then the peer comparison: Godrej Consumer Products, Dabur India, Colgate-Palmolive, P&G Hygiene, Gillette India. Market cap: I think this is the largest market cap amongst all the companies. Godrej Consumer is 1,13,000 crores, Dabur 89,000, Colgate-Palmolive 65,000, P&G 44,000, Gillette India 26,000. Then return on capital, I think Colgate-Palmolive has a high return on equity and return on capital. P&G 83, ROC 112, Gillette India 42.58, and this is price to earnings. Godrej has a very high to price earnings of 284. Hindustan Lever 50, EPS of, so EPS again depends on the value of the share, so something that we'll have to compare all the stocks with. Dabur India 62, Gillette 55, P&G 62. So I think the cheapest available is Colgate-Palmolive, and this is one of the companies that we'll be reviewing today as well. So we have Hindustan Lever, Hero Motocorp, Colgate-Palmolive, and Happiest Minds. So those are the four stocks that are in discussion today. Then promoter 62%, DIs 14.7, public 12%, FIs 11.43, no promoter holding pledged. Company has maintained good ROC of 26%. Company is virtually debt free. Company has healthy interest coverage ratio of 46. Company has maintaining effective operating margins, poor profit growth, poor revenue growth, 8-9%, trading at 50 times. So good efficient cash conversion cycle of minus 97 days, good cash flow management at 1.14, good promoter holding of 62%. Then this is the companies, various different companies of Unilever that hold as the promoter holding here. Then some uh, institutional investors, foreign investors, and the public in general occupies around 38% of the share value. This is the logo of the company. These are some of the brands that you can see. Then some more brands. You can see Rin, you can see Boost, you can see Dove, Vaseline, Lifebuoy, various different products. Again another picture, Surf Excel, Bonds, Pepsodent, Vaseline again, various different brands. Then you look now. Let's move on to Hero Motocorp. This is the second company in topic for discussion today. Price 3,633. Known as Hero Honda, is one of India's first motorcycle manufacturers. The company started in 1984 as a technical collaboration with Honda Japan. Before this collaboration, Hero was selling cycles under the name Hero Cycles. Honda Group sold its 26% share in the company to Manjula's promoters and ended the joint venture. Post the termination of the joint venture, the name of the company was changed to Hero Motocorp. Uh, Charisma SMR HD 440, Maverick 440. It has about 7 models in 2024. It has sports, adventure, roadster bikes. The premium segment contributed 25% of the revenue mix Q3 of FY24. Brand association: Harley Davidson, Maverick, Pulse, Extreme. Then established brands: world's largest manufacturer of two vehicles in terms of unit volume sold by a single company in a calendar year for more than 2 decades. The overall market share of the Indian company Motorcycle is 48%. Two-wheeler segment stands at 34%. The company has strong brands: Splendor, Passion, Glamour, and Pleasure, Maestro in the scooters segment, and others. Uh, Price 3629, market cap of 72,500 crores, stock P 17.5, book value 951, ROC 30, ROE 22, face value 2, price to book 3.5, price to book here is not available. Okay, cash 608 crores, company does not have any debt, sales growth 10%, profit growth 36.3%. Okay, then some brands: Vida, Splendor, Glamour, HF, Dulux, Achieva 150, Extreme, Charisma, Passion Pro, Destiny, Dude, Maestro, Pleasure, Pulse, Hunk, Dash. In comparison, Bajaj Auto, Aisha Motors, TVS Motor, Ola Electric Mobility, Atul Auto, World Wizard, Innovative, uh, Tunwali Motors, Delta Autocorp. So market cap: Bajaj Auto to 2,25,000, Aisha Motors 1,45,000, TVS Motor 1,14,000, then Hero Honda Corp 72,000, Atul Auto 1,29,000, Ward Wizard 56,000, Delta Auto Corp 10,000, Junwal, sorry, Ward Wizard is 560 crores, Tunwali Motors 170 crores, Ola Electric 24,730 crores, Delta Autocorp about 100 odd crores. And price to book, you can see comparison from 1 to about 12, uh, with the highest being about 12, lowest being about 1. So various different companies, you can look at the price to earnings: Bajaj Auto 28, Aisha Motor 35, TVS Motor 49, Hero Motocorp 16, which is good. Uh, so I think the best in the market at the moment, price to earnings of 16, 15. You can check, I mean, return on capital employed, most of them is good. You can ignore Atul Auto, you can ignore Ola Electric. The other three smaller companies, you can ignore them. Comparison between Bajaj, Aisha Motors, TVS Motor, Hero, Motocorp. So all the top brands above 30% return on capital. So all of them have a good option, good opportunity for long-term investment. Please consult a stockbroker. Then promoter holding 34%, FII is 28, DII is almost 28, public 10%. So overall, good stakeholding provides stability to the stock, especially the DIIs. FIIs could also lead to some volatility because bulk selling in the market could cause panic into the market as well. And company has maintained healthy ROC 25%, virtually debt free, healthy interest coverage ratio of 285. Company's PEG ratio is 0.44. Company has poor revenue growth of 6.74 in the last 3 years. Companies okay, good energy efficient, cash cycle of 34 days, uh, good cash management at 1.2, 1.2, promoters 65%. Sorry, these are the direct institutional investors, foreign institutional investors, and uh, some public shareholdings. You can see Life Insurance Corporation 8, Kotak FlexiCap Fund 2%, ICICI Prudential Blue Chip 4%, Government Pension Fund 2%, WGI Emerging Markets Fund 2%, SBI Nifty. So there are many more. Some more information. I think we've been through most of it. We've been through this as well. Healthy dividend payout of 76%. Poor sales growth we've been through. Again, comparison, addition of Urja Global here, 662 crores market cap. Most of the others we've already covered. No Bajaj Auto in here compared to the other companies. So again, most of them. So TVS Motocorp return on capital is only 15% showing here. So maybe we need to investigate and analyze that stock a little bit more to get more information. Two different sites showing differing information. This site seems to be more accurate mostly from what I have seen in the past. Operating profit has been consistent. However, since there is no growth in profit, that could be negatively affecting the sentiment of the price after the correction in the market. So market expectation not met could be the reason why the stock is available at a 52-week high or something very close to the 52-week low. Balance sheet, good reserve increase. Liabilities, other liabilities are high. These are really been more or less consistent, so not really impacting much. What you can see is the return on capital employed has grown in the last 2 years from 18% again to 29%, which is a good sign for the company. Then we move to the third stock, Colgate-Palmolive, which is 2,400. Revenue is up by 5%, net income down by 2.2%. So again, this is a negative sentiment which would have impacted the stock price of the company. Net profit margin down 6.6%. Again, a negative sentiment impacting the share value and the share price of the company. Stock P 45, face value 1, price to book 33, cash 1,373 crores, debt no debt, promoter holding 51%, high ROC 99%, profit growth 26%. Price comparatively Godrej 1110, Hindustan Lever 2249, Colgate-Palmolive 2404. So price range, you can see market cap, Hindustan Lever is the highest, then followed by Godrej Consumer 1,13 crores, 1,13,000 crores, Dabur India 90,000 crores, Colgate-Palmolive 65,000 crores. Stock P is something that we would need to be looked at an individual point of view. Return on capital employed. Again, you can see PNG 112, Colgate 99, Gillette India 58. So these 3-4 stocks need to be looked into. Possibly they give a high return on capital, so a good stock to consider for future. Then you can see promoter holding 51, FI is 23, DII is 7%, public 18%. Still high volatility of the stock because of FI and public holding. Uh, More stability provided to the market by DIIs, maintaining healthy ROC of 70% in the last 3 years, healthy ROC 93% in the last 3 years, healthy interest coverage ratio of 357, poor profit growth of 8.5, poor revenue growth of 6%, 5.5%, has contingent liabilities of 1,300 crores. That is the limitation, negative sentiment. Then we've been through most of this. Company is trading at a high beta of 30. That is earnings before income tax and deduction. This is the dividend paying history in the last 4 months. Investor value 49% consists of DIIs, FIIs, and the public. This is another high, 52-week high of 3,900, face value 1. So this is information from another site. Again, book value 61. We've been through most of it. Healthy dividend payout of 107%. Okay, then you can see, the sales revenue has been more or less stagnant in the last 1 year or the last 3 quarters, which is the reason why the sentiment in the market is not very strong, not meeting the expectations of the growth expected by the market. Net profit has declined from 380 crore to 323 crore over a period of 9 months. So again, a negative sentiment that is impacting the stock value. Expenses, though overall sales have been growing quarter on quarter. If the growth works out quarter on quarter basis, then there would be a bull rally in the stock. Net profit over the last 3 years is the highest so far in the last 12 months. Reserves have reduced in the last 6 months, possibly due to some investment or large scale capex work, borrowing 70 crores, total liabilities of 1500 crores, which have grown in the last 6 months, 9 months. Days payable have increased, so the last quarter of the last year hasn't been very great, and there has been some impact in the overall financials of the company. It's taking longer for it to pay its debtors. Then we move on to the fourth and the last company, Happiest Minds Technologies. 658 is the share price, 10,000 is the market cap, price to book value of 6.54, face value 2 rupees, cash 1300 crores, debt 442 crores, promoter holding 44%, EPS 10 rupees last 12 months, sales growth of 10.5%, ROE of 21, ROCE of 22, profit growth of 13.56%. Then you can see market cap, Zenza Technologies 15,000 crores, Newgen Software 14,000 crores, Cyient 14,000 crores. So these are more like comparative peer companies ranging from 7,000 to 15,000 crores as market cap. So you can look at the price. Newgen 1029, Zenza 673. More or less, most of the stocks are within uh, 300 to 700 range. There are like 2 3 stocks which are above, uh, which are near 1,000 and above 1,000. So again, we need to look at how well these companies are doing compared to the price that they offer. Consulting a financial investment advisor would be the best thing to, maybe you shortlist a few companies and then you can get somebody to review and suggest, give you some expert advice on that. So price to book value, you can see Zensar is 5.2, Birla Soft is 7, Scient is 4, Sonata Software 13.3, Happiest Minds 6.5. So you have some good value additions and you have some expensive ones as well. Price to earnings also, again, you have some which have a very good value. You have Zenza Technologies 27, which I think is one of the best. Scient is 13. Maybe the company may not be fundamentally very strong with the running business, which could be the reason why the company is not able to uh, have a good price to earnings ratio, and certainly the price to book value is also not very high. Return on capital, the most important point here is industry average of above 16. Most of the companies range between 20 and 27, or maybe 30, you can say 30. Only one or two companies stand apart, a couple of companies in the negative, so you can just simply ignore them. Look at Sonata Software 61, Happiest Mind 22. So most of the companies are range of 20 and 30, so something that is an industry average, I believe. Public 44.5, promoters 44, DIs FIs between 5 and 6%, 1.76% promoter pledged shares, income growth over the last 3 years 24%, good ROE, good delivered good growth, IP domain and expertise across a set of focused areas that include digital transformation and enterprise solutions. So it's IT solutions provider giving wide variety of good wide variety of products to the market. Digital solutions, product engineering services, infrastructure management, IMS is okay. Face value 2 rupees. Some other information you have readily available here. We've been through most of it. Some financial ratios would be a part of the write-up that I'm going to share on Facebook and across along with this post. So keep a look on these. Again, some different names that have come up on this site: Oracle, FinServ. So maybe different kind of companies with different product businesses. Uh, One of their product ranges would be similar to what Happiest Mind is doing. However, not a comparison of an orange to an orange or an apple to an apple. So you will have companies having different type of product segments that it is offering its product to. So something that needs to be kept in mind. So again, ROC, some of them low of 20, some of them high of 38, 40 as well. So something that you could definitely look into. Uh, the sales revenue hasn't really done anything this year. It's been more or less stagnant. Net profit has reduced. These are the two negative sentiments impacting the stock price of this stock. So a growth in sales and a growth in profit would be the key drivers that will drive the price of the company up. Though the company has steady sales revenue, however, it is not being able to convert and create more value for the investors. So that is the reason why the sentiment is not very great for the stock, though it is available at a good low price now, with potential of businesses developing or growing in the next 2 to 3 quarters. There are high chances that all these four stocks covered in today's video would definitely do well. Still, once again, would request you all to consult with a financial stockbroker or advisor that would be able to guide you in the best way. So overall, this is the picture, and thank you for watching, friends, and Please share this video with your friends, family, and associates, those who would benefit from this information. Thank you for watching once again. Have a lovely week ahead, and we'll catch up with another video tomorrow. Thank you.